Hello, everyone. My name is Reese, and this is episode 2 of the Should You Buy It series. And in this episode, I will be looking into QYLD, which is a Nasdaq 100 covered call ETF. And for those of you who don't know, this is a pretty popular dividend type income investment style where it's an ETF that sells covered calls on the Nasdaq 100. And what that means is, in a nutshell, a covered call strategy is a type of options trading strategy where you are selling calls of an asset that you already own. So that is what makes it a covered call. That is simply a nutshell version. It's a little bit more complicated than that. And what selling covered calls is essentially trying to seek some sort of income stream on those covered calls that you are selling. So you're seeking some sort of return through that on the premiums earned through the options. However, as part of a trade-off with a covered call strategy is that using covered calls, it kind of limits your potential upside while also kind of limiting your downside. So it's kind of used to reduce overall volatility and try to earn a yield off of some sort of volatility. And specifically with QYLD, it is a monthly paying income fund. It's an ETF, and it has a 0.6% expense ratio. Current price is $16.49, ticker QYLD. And as of right now, it is paying an average yield of 16.33%. So for income investors who are looking at some sort of high yield, this is a pretty popular ticker that I see come up quite a bit. There are competing funds that are similar to it, such that might track the S&P 500, and then GEPI is a pretty newer product as well that seems to be pretty popular. But for this video, we'll just be looking at QYLD to talk about some of the potential pros and cons associated with it to see if this is a good investment option, who it might be for. So now that we went through the kind of the basics overall of what it is, what it's tracking, the fees associated with it, a 0.6% expense ratio is a little higher, but you are getting a very high dividend yield. Now, this is where I think people need to really understand what they are purchasing and not just going off the numbers. Oh, they see a high dividend yield. Oh, it's paying monthly. Because for dividend investors and income seeking investors, if they're getting a high yield and a monthly distribution, that's great on paper, but you also need to look into what are you sacrificing in return for that high dividend yield. And I've done a couple videos about this before in the past, where I've talked about dividend growth versus high dividend yield investing, specifically for stocks. And what I found is that the higher dividend yield you are getting, usually the less capital appreciation you're getting as well. So dividend growth has higher asset appreciation, and dividend yield tends to have higher yield but less growth. So let's look into how QYLD has done historically. And so this software is called TradingView, and this is since inception. This fund launched in December 2013, and since inception, as the Nasdaq 100 has seen crazy growth in the past decade, especially driven through these low interest rate environments and high growth companies. Now, this covered call strategy, because it's trying to generate income off of selling options, it doesn't quite actually follow the Nasdaq 100. So with this high yield, without reinvesting dividends, since inception, it is actually down 34.4%. And if you had reinvested those dividends, you would have begun a 66.21% return. So in a nutshell, what this is showing is that these high dividend yields are coming at a price. These high yields that are paying out through dividends, because dividends are taken out of the share price every time a dividend is dispersed. So over time, these high dividend yields are eating into the fund more and more and more. And over time, it's really taking a beating. For example, QQQ, which is the Nasdaq 100, absolutely you know, destroys on the fund in terms of growth rates. Yes, QQQ is going to be more volatile, but this is without reinvested dividends. And when we reinvest those dividends, QQQ is still, significantly outperforming the overall, the QYLD overall return with reinvested dividends. So that goes back to, yes, QYLD is, you are trying to get some sort of high dividend yield sort of appreciation, but the price that you're paying is that your assets are actually depreciating over time. And if we look into seeking alpha as time and looking into the dividend yield over time, and technically the yield is increasing over time and your yield on cost is increasing. But that's not because the dividend is really growing. In fact, the dividend is kind of inconsistent over time because it depends on market volatility to generate those premiums through a covered call strategy. So instead of this dividend yield is increasing over time, not because these dividends are increasing substantially, but the underlying asset price is decreasing. You're seeing a minus 34% return. Let's look at VYM, for example. VYM is the Vanguard High Dividend Yield, which it's an index composed of above average dividend paying companies. And what we see is that what's nice about VYM and dividend stocks in general is typically you're getting less overall volatility than the overall market. In fact, VYM, this is not including reinvested dividends. VYM is actually pushing for an all-time high right now. It's not that far away from an all-time high. Whereas overall market and the Nasdaq specifically are taking a beating year to date. So this is where dividend investing, specifically income investors, some people like to find that type of that investing style attractive because you might be trying to see, yes, you might be getting lower overall returns, but you're getting some sort of passive form of income through dividends, as well as potential lower overall volatility than the overall market. And I don't think that something like QYLD is really meeting those goals because I think you really need to understand what you are buying besides just looking at the sticker price of the yield. Because we look at reinvested dividends, it's QYLD is holding its ground a little bit better, but it's still getting, VYM is more than double performing the overall market. We include, VYM has double the performance as QYLD, and VYM has a very low expense ratio. I believe it's around 0.06 or so. Anyways, and then we look at VOO, which is S&P 500, and with reinvested dividends, it's still showing that overall decay and growth through those dividend payments over time is really taking a hit on these covered call funds, whereas overall market and dividend investing, yes, overall market's down quite a bit right now, but dividend stocks are holding their ground. Let's look at year to date. So this is where things get a little bit more interesting because people are arguing that, maybe this covered call strategy will protect you a little more in a downturn. Well, the covered call strategy at least for the Nasdaq 100 is down more than the S&P 500 or dividend stocks. Like I said, that dividend fund's only down 2%. We adjust it for reinvested dividends, and QYLD is still at the bottom, and the dividend stocks are actually returned a slightly positive return. So these are things to keep in mind. And in summation of basically everything I just said, QYLD is trying to give investors a form of monthly income through selling covered calls against the Nasdaq 100. It is getting a very high dividend yield of 16% at the price of asset capital appreciation in the share price. The share price has actually gone down 34% since fund launch, whereas the S&P 500 and then other high dividend yielding funds such as SCHD, VIG, and VYM are doing quite well. And I will be looking into JEPI, which I think is a potential contender against QYLD, which might do a better job. And so I will be doing another video looking into the specifics of that. But In a nutshell, QYLD, you're getting a very high dividend yield and your capital appreciation is decreasing, and you are not seeing the upside that you are getting with higher, higher return investment vehicles that may have a lower dividend yield. So what I'm getting at is dividend yield is not the end all be all of investing. Really understand what you are paying for that dividend yield. Why is that dividend yield so high? And what are you paying in terms of potential performance gains? So who is QYLD good for? I think really it is not going to be a good long-term hold, especially when you compare it to something like an overall S&P 500 or some sort of dividend fund like VYM or SCHD if you have a long-term time horizon. And even with the short term, like year to date, it's still underperforming those stocks, which are giving you higher returns in the long run. So really, who do I think QYLD might be good for? Really, I personally would not give it a seal of approval to purchase. It's not something I would buy in any of my own assets or in any of my own portfolios, including my dividend portfolio that I'm currently working on. And I'm not a financial advisor, but I'm trying to tell you these are the risks associated with something like QYLD. QYLD specifically, I don't think is a good buy, and I don't think that you should buy it. So for my official rating of the should you buy it video is that I think that you should not buy it for the reasons that I have stated. So I hope that all made sense, and I hope you can understand the reasoning that I was trying to come at. And this is speaking from my experience, my personal views on investing, which may differ from yours. So feel free to leave a comment below if you have any additional input or things you think that I should look into or consider when talking about QYLD. And if there's any other specific funds or ETFs or stocks that you think I should look into, feel free to comment below as well. I'll be more than happy to take a look and see if that's something I can do. Thanks for watching. If you want to see more content like this in the future, feel free to leave a comment, like, or subscribe to help support the channel. I really appreciate it. Thank you for watching, everyone. Hope you have a great one. Peace out.